part of it is an earnings story, but part of it is a multiple story. And then we have sort of classic tech on one side, but we also have meme stocks. I don't even know where you put the meme phenomenon. Some of those are tech oriented anyway. What do you think's going on here?
Yeah, I mean, don't buy meme stocks, right? And if you are, try to get out. And so don't leverage meme stocks. I mean, some of this stuff is sort of investing 101 that people have kind of left behind in pursuit of sort of, I don't know if it's a mix of they're bored or they're cocky, but it's not working for almost anybody not named Ryan Cohen right now. So, that side of the equation, I think, is in a really different spot. Overall, though, the tech stocks, the NASDAQ, they're just not doing well with a Fed that doesn't want inflation. And people keep trying to hope that the soft talking on the side of Powell means that they're going to escape. And the reality is that the Fed's kind of taken a speak softly and carry a big stick approach to rate hikes. And I think we have to learn to live with it until inflation's at least back under the 6% mark, not even to mention the 2% target that the Fed has.
So your expectation is that Friday, 10 a.m. Eastern time, when we hear from Jay Powell, it is not going to be good, and that the market, if it hasn't come to its senses already, or is really going to come to its senses then? I mean, that's the other question. Do you think this is already baked in at this point or not?
I don't think it's already baked in, but I think that people woke up on Monday morning and said, "Oh no, there is going to be, likely a call Friday that we don't like about what that means for September." And I think that people have started selling off against that. And I think we're going to see a lot of that continue this week. And, it also doesn't help that there's likely to be a rate hike because the retail sales have remained strong and we're heading into shopping season, right? Back to school, holiday. So we might not see that weakness in retail sales that suggests the consumer has had enough and has given up to inflate, and that lets inflation go down until the new year when buying slows down. And so, for tech retailers like Amazon and Apple, they're also going to need a lot of people in stores. They're going to need in warehouses to meet that demand of that retail buying behavior. So don't expect them to find cost savings, on seasonal labor count. It's just, I don't think that the tech stocks are going to do what we want them to do for a while.
So, Sarah, here's the thing that I want to understand, which is the psychology of the markets. Can you explain, when you say people woke up on Monday and said to themselves, oof, maybe the Fed is actually going to be a little bit harsher than I thought. What made them do that, and what made them optimistic prior? When I do think, if you look at the economists out there who've been talking about this quite publicly, virtually all of them have thought that 75 basis points is where the Fed is going to be going.
I mean, bear market rallies, I think, are a little bit of kind of, rearranging deck chairs on the Titanic, right? You want to think that things are better than they are. And so, I think there was that. And the reality is, if you're a trader and your job is to make money and you have a position that, that did bounce up during that rally and you're able to lock in those gains now, you're happy, right? You're not as happy as if it was continuing, but you're happy. And so I think a lot of people, treated that rally like a mini kind of spring break from reality, but now we're back and, there aren't a lot of indicators that it's going to look better in the near future. It's not just Jackson Hole in the meeting on Friday that is a risk to NASDAQ tech stocks, right? Europe is nearing a recession due to the Russian war. China, I think, is a story that not nearly enough people are paying attention to. They're upset about, U.S. government officials' visits to Taiwan. Taiwan, of course, being a place that produces a lot of components, a lot of chips for companies like Apple. And, also companies like Apple and Tesla sell a lot of product to China, and be outside of the macroeconomic issues there, outside of the re-election concerns there is a very large brewing conflict between China, Taiwan, and the US. And tech stocks are square in the middle of that. So, I think it's really important to take a moment right now and look around and say, yikes, there are a lot of lights that are flashing. Things could get very bad very quickly. How do I lock in my gains or protect from downside? Not how do I go, make 3,000%.